Hello everyone, this is AG47 Liberty again. This is with an update to the silver market manipulation or soap opera. This thing's been going on. I've been watching it, so now I figure there's enough. You know how soap operas move very slowly, so I want to give an update. What's driving the recent drive or the recent surge in the silver and gold price. Basically, this is what has been occurring since my last video about the silver soap opera. The BRICS, that's Brazil, Russia, India, China, and they also put in there South Africa so they can have an S. Um, these nations have decided, they got together somewhere in Asia, and they decided not to use the dollar in transactions amongst themselves. Now, these are the largest economies outside of the G7, and they're pretty big. I mean, considering China is the second largest economy in the world, that's a really big deal. And Russia, being one of the largest supplier of natural resources, also a big deal. And same thing with Brazil, rather large. It's the largest economy in South America. South Africa, the largest economy in Africa, and we know all about India. So all these are very important countries, and they've decided to use their own currencies and not the dollar for transactions. Big deal. That means they're selling off dollars to get their own currencies or something else, and it's causing the price of silver and gold to rise because there are now more dollars on the market that nobody wants. So that's really hurting the value of the dollar. That's why silver and gold appear to be going up, but it's not. It's actually the dollar is dropping in price. Okay, let's see what else is going on. They decided not to use the dollar in transactions amongst themselves. These are also nations who are major economies of the world and trading partners of the U.S. Many U.S. industries moved to these BRIC nations due to incentives provided by the U.S. government. Yeah, at our taxpayer expense. They gave these U.S. companies money to move abroad. The U.S. government took our tax dollars and gave them to the industries moving to these BRIC nations. Yes, it was an act of insanity. Theft. Next, this is one that not many people talk about, but it could be very interesting, especially in the tight silver supply that's out there. There's not enough silver already. So this is concerning Bolivia. Bolivia, they want to nationalize the takeover and confiscate private silver mines to bolster yet another failing government. And I think they will go ahead and do it because Bolivia has already demonstrated that they are nationalizing is not beyond them. They've already nationalized the natural gas and oil industry. And of course, once they did that, production fell considerably, and nobody in the oil and gas industry is investing there. So what you see is a declining amount of revenue coming into the government. So now they're looking for other revenues to support their socialist programs that is draining the treasury. And sure enough, with the surge in silver and gold, they're going after those. And considering that Bolivia mines 1.1 million tons of silver every year, just cut that in half right now. And that's how much less supply there will be coming onto the world market. Right when we need the silver the most, right now, Bolivia does these shenanigans. All right, this joyous event will begin on May 1st. No coincidence. May 1st is also the time that the communists used to have their big parade, the May Day in Russia. So here we have them taking over the mines on May 1st, which I don't doubt will happen. Therefore, you will see the price surge, and probably before then. And I think as a recent price action has demonstrated that investors have figured this out, and the price is surging, at least for the real metal. If nationalization were to take place, then investment would plunge, production will fall, and Bolivia will find itself in even worse shape. Exactly. Just like production fell for natural gas and oil, it will fall for silver and gold and other metals that they also confiscate, other mines. What else went on? Well, the much ballyhooed CFTC. The head of the CFTC is an ex Goldman Sachs executive. Surprise. What was the much anticipated result of the much ballyhooed position limits? Remember they had to go think about it? Well, they thought about it, and instead of addressing or implementing these position limits, the CFTC panel simply ignored their promise, said nothing, and adjourned the meeting. That's your government in action, folks. It screws you only. Because only the rich can afford to play politics. And most of us aren't rich. We can't afford politics. So, that's the biggest actions that are driving the silver price right now. Those things. So, one other thing that might be driving the silver price is the short from JP Morgan they might be starting to cover. They may have finally be the first link to break in the chain. The big banks that hold the massive shorts in silver are JP Morgan, Goldman Sachs, and HSBC. Now, supposedly they have collateralized their short positions by using their stock. And according to Max Kaiser and them, they've used it as collateral, and once the silver price actually surpasses the stock price, then that will force one of these companies, quite obviously the weakest one, to start covering their short position. Well, as of last week, JP Morgan is found to be the weak link in the chain. The stock price has surged past JP Morgan's, not the stock price, the silver price has surged past JP Morgan's stock price. And as of this morning, right now, in Australia, silver has surged over $1. It was, last I looked, it was over $1.10 at $47.71 an ounce. The stock price of JP Morgan is only $44.68 as of Friday's close. Here on, it's now in the U.S., it's Sunday, April 24th. So tomorrow on April 25th, it's already April 25th in Australia, and we've already seen the opening salvo, and silver is up over $1. Goldman Sachs a little farther out of the reach, but they'll get pulled down too, because JP Morgan will probably clutch on to the next nearest one, which is next nearest banker, which is HSBC. Their stock price is $54.36. Now, once one starts going down, they'll cling on to the other and drag each one of them down with them. This could be quite volatile. So JP Morgan's the first one. Maybe they're trying to cover right now. I don't know. So let's see what happens. And I think this is the beginning. If this sustains itself through London, I think this is going to be one wild week. We'll see if we can get to HSB. Once we can get the majority of these bankers in trouble, I think it's all over. But with JP Morgan in trouble, it's a good start. So we got the first big one down, and that's JP Morgan. Remember, their stock price as of Friday was $44.68. The current silver price, up $1.10 in Australia, is $47.71. Let's see if it can carry through. And good luck, and remember, and this is something JP Morgan and Goldman Sachs and HSBC should have remembered. Trust in God. Everyone else pays in silver.